Hi, everybody. My name is Rob Noonan. I am a Rialto Markets co-founder and your host for our latest Secrets of Success webinar. FinTech experts Rialto Markets and CalTier will discuss the private securities market. Before we get started, I am required to read a disclaimer. CalTier Inc. is testing the waters under regulation crowdfunding. No money or other consideration is being solicited, and if sent in response, will not be accepted. No offer to buy the securities can be accepted, and no part of the purchase price can be received until an offering statement on Form C has been filed with the Securities and Exchange Commission. Once filed, offers to buy securities may only be accepted through our intermediaries platform. Any indication of interest you make to us regarding this offering involves no obligation or commitment of any kind. So now that I have that piece of housekeeping done, I'd like to introduce you to today's panelists. Alongside me, I'm delighted to have a fellow Rialto Markets co-founder, Joel Steinmetz, our Chief Operating Officer. We're also joined by Matt Belcher, CEO and co-founder of CalTier, an exciting fintech crowdfunding company that is changing the way people around the world invest in real estate and alternative assets. CalTier's stated mission is to give everyone the chance to build their wealth with commercial real estate opportunities, regardless of their location, experience, or starting wealth level. I'm sure Matt can tell us much more about that mission and what sparked it. He's an international entrepreneur who has been involved in many aspects of fintech, crowdfunding, real estate, and several forward-looking business ventures. His expertise spans 25 years in various industries in the UK, Europe, and the Americas. Our own Joel Steinmetz is also no stranger to new technologies shaking up financial markets. His career includes senior positions with Citi, Citadel, Instinet, and Liquidnet. He's now involved in doing the same for the private markets through Rialto Markets. Before we hear from them, let me set the scene for what we're going to discuss and share today. In keeping with the ongoing Secrets of Success series, we'll be looking at what it takes to harness the power of this incredible modern phenomenon that is crowdfunding. Key points will be how a private company raising capital, one, can build its own branding and community of investors and advocates. Two, must own and utilize its data. Three, defines the customer experience. Four, the focus on marketing and communication to investors. And five, consolidate customer experience in one place. Additionally, you won't be surprised to hear Joel explain how Rialto Markets can do the heavy lifting for the issuer across operational and regulatory areas. But the webinar won't be just about Matt and Joel. Members of the audience are welcome to get involved by adding questions via the chat. I'll feed them in both as we go and in the Q&A session at the end. If we don't get to all the questions, we will do our best to follow up with you afterwards. Also, the webinar will be available in full on our YouTube channel in the next few days. The entire webinar is being recorded. So now I'll turn and start by asking Matt to tell us how CalTier came about and its journey so far. Matt?
Yeah, thank you, Rob. There's a bit of feedback there.
I'm not noticing.
Rob, Joel, can you mute yourselves just while I'm speaking? Yeah, thank you. So thanks, Rob. I know you had the delightful task of reading the disclaimers, which is the most fun part of the webinar for people here. So thanks for doing that. I'm just going to bring my desk up here. My name is Matt Belcher. I'm originally from the UK. I've been in California for 12 years. I now sound like an American. I'm sure all of you who are American on here think that. But I've been involved in many different aspects of business. Typically, when I was in Europe, mergers, acquisitions, I was a management consultant for a long time. And then when I moved to San Diego, I got involved in real estate and financing large commercial real estate developments, very complex, hotels, infrastructure, like public-private partnerships with the city of San Diego in California and Riverside County here and a bunch of other public-private partnerships. And so, those financing mechanisms are very complicated because they You have government, and you have public, and you have banking, and then you have the local city within municipality. So it's a complicated way to finance something. And it really, to be frank, it was I was a very steep learning curve over sort of 8 years to cut my teeth and learn about that with a couple of my partners. And we financed we were consultants and helped finance a bunch of different very large scale developments. And in that, how did CalTier come about, and what on earth is it? We were connected with, obviously, peers in the industry, and a lot of those folks were involved in different types of real estate opportunities. So hospitality, industrial, storage, retail, you name it, multifamily, apartments. And I was watching that and talking to some of my peers, and I'd be perfectly frank, it was because a couple of my friends, my peers, were making really good money in the apartment business, and we weren't really involved in that. The challenge with typically most of those opportunities is you typically have to be, an accredited investor, right? So in the United States, it's estimated that there's about 160 trillion of household net worth in the United States, wealth, and about 80 trillion of that is managed by accredited investors. So that means there's this huge, let's just say it's 50%. There's 50% that is managed by non-accredited investors. Okay. And we started looking at these deals, and I wanted to get into some of these deals. And, sometimes you have to drop 150, 200,000 at a time. You have to leave it there for 3 to 5 years. And to be just totally candid, I didn't have that kind of money myself to be able to commit to those types of deals, but I really wanted to get into them. And so my partners and I started looking at how can we participate. And we realized that, the crowdfunding industry at the time was relatively new. There were a couple of leading companies that were sort of at the bleeding edge of it, who had taken that role on and said, we're going to use this crowdfunding mechanism. But even 3 to 4 years ago, crowdfunding was kind of considered quirky, I would say. It was unproven. Today, I think we'll talk about this in a bit, but we'll see that it's anything but, and it's actually driving a market change, and we'll see how that's being really powerful. But so you've got this desire of diversification, right? Because if you're not an accredited investor, how else can you get into other opportunities, other alternative assets? It's very difficult, right? So you're on Schwab, or you're on E-Trade, or you're on Fidelity. You can really only typically invest in those types of public public market opportunities. Whereas now with this alternative investment marketplace and using crowdfunding and combining them together, we are now giving basically the power to, call it the power to the people, the retail investor, to be able to diversify not all of their portfolio, let's say, but a majority, a share of their portfolio, where they say, I don't want to be in the Fidelity index tracker or the Fidelity technology fund or a particular stock. I would like to get involved in something like, for example, what CalTier focuses mainly on is certainly real estate, and mainly apartment complexes, because we can talk about that in a minute, why we like them so much. And so that's really where the company was born. And we saw, like I say, we saw a couple of other companies doing it. They were very early, they'd proven the concept. And we looked at it much like, I guess, Starbucks, when they looked at the coffee business. They weren't the first in, but they looked at it and said, we think we can do this, and we think we can do it better. And that's the journey that CalTier is, that's where we're currently at. We've invested in, either directly or fractionally with partners, 17 assets. It accounts for several thousand apartment doors. We have one fund running. We're about to launch our second fund. We have 24,000 registered people on our platform, and it is growing significantly by the day. So it's a very, very exciting time. So that's kind of the 1,000-foot overview of CalTier.
Sorry, I'm not used to muting. I love your point on diversification, because by the time companies go public these days, all the growth is gone, and people are looking for different alternatives. Maybe not to invest all of their money, but the 60-40 split is definitely needs to be changed.
Rob, I completely agree. I mean, the 60-40 portfolio split is gone, right? I mean, it doesn't work for most people unless you're incredibly wealthy, actually. And let's talk, if you don't mind, I just want to jump on that. I mean,
go ahead.
For those who may or may not know, there's a whole industry that is purely, they have one role. Rialto being one of the very different companies that does something, that's why we're here, because you guys have a vision for the future. But there are other similar organizations, right, where they just literally are working on selling to accredited investors opportunities for companies that are going to go public prior to them going public. You're allowed to do that, right? Yeah. Within certain terms. So those opportunities for the people on this call here, if you're unaware, there are companies and teams and salespeople out there who all they do is they go play golf, they go have dinners, they go have lunch, and they're selling to accredited investors saying, this company is going to go public, you should put your money in now. And like you said, Rob, all the good juice, all the upside, unless that stock does something ridiculous once it's going public, all of that upside's gone. And the average investor, or the retail investor, I'm included in that, you're never going to get that opportunity. You're never going to see the chance to have that, huge upswing. Like Peter Thiel, invested in Facebook early, and he used the self-directed IRA to do it. That's the sort of, I'm not saying that CalTier is necessarily going to be the next Facebook. I'd love that if that was the case, but that's the sort of concept where he got in early because he knew some people, and that's what Rialto's doing to sort of blow the glass ceiling away for these types of companies like us that are on the way up and growing, and we allow other people to join us on that journey.
Yeah, and I did a study months ago on the last 100 IPOs, and had you bought them all, I think you're down 30 or 40%. So the growth is definitely not there.
Really?
Once you go public. But Joel, I'd like to go to you to talk about Rialto Markets and the private securities market outlook for the rest of 2023 for both issuers and investors. Joel, you're on mute.
Sorry, I was on mute too. Thank you very much. So I'm actually, I'll take if Matt took the 1,000-foot level, I'm going to take it up a notch and bring it a little higher, but really segue from some of the things that Matt was saying. If you look at the overall market, Rob was saying this as well, companies 20 or so years ago were staying private for about 4+ years. Now it's 13+ years. If you look at companies up until the year 2000, 90% of the growth, investment growth, happened in the public markets. If you take now the last 20 years, over 90% of the growth is in the private markets. So, that's an important number, basically saying, well, in order to be able, to turn your investment money into positive money, having some involvement within the private markets and the alternatives is essential for your investment portfolio. Now, that's interesting when you talk about an investment portfolio for the wealthy, for accredited investors, etc. So at Rialto, what we try to do, what our goal and vision is irrespective really of the industry, and we'll bring this down to how it works within the real estate industry and with someone like CalTier particularly, but irrespective from our vision and our vantage point, we just want to do what Matt had been saying and just blow the glass ceiling off of that, because it used to be where even though you were like I said, after the year 2000, most of the money was made in the private securities, in the private markets before it went public. But who had access to that? It wasn't really just every individual investor. It still was a private market, but it was an old boys network, if you will. You had to belong to the club. And what we're looking at, and I know it's an overused term, but it's an important term, and that's democratizing the investment world. It's the ability to go in and offer these kind of alternative investment to the world at large. Matt pointed out saying, you had someone who was able to invest in Facebook because he knew someone. There's a difference when you can get in because you know someone, and you can get in even if you don't. What we're trying to do is to offer opportunities, a wide range of opportunities for a wide range of industries, give people as much information as they can get on those securities. We feel that the regulators have been extremely helpful in this manner by putting that regulatory oversight and creating an environment where investors can actually go in and get some paperwork, some information, some basic things to give them at least an understanding and an education. It's not that regulators are guaranteeing this or even qualifying it or giving any support to it, but at least they're requiring the companies to give the information necessary, and it's available to the individual investor. So now we have investors that have all of these potential alternative opportunities, private securities that were never available to them before. And once you've created a scaled environment from a technology perspective, you can handle investments like $1,000 rather than $100,000.
Yeah.
Now, one of the problems, as Matt had pointed out, that you need $150,000 to invest, is because no one could handle the operational side of it if you had 10,000 investors coming in. So if you're going to try to raise $10 million, you're going to require a $100,000 minimum because you can't handle much more than that. But if you can create an environment where the operational efficiency and the technology is available to handle really just a vast amount of investors efficiently, now you have the entirety of an ecosystem and an infrastructure that allows companies like CalTier to go to the marketplace and say, why don't you diversify your investments through other opportunities that were heretofore not available to you? And for us, that's an important feature as the market starts to get more and more entrenched, or not even starts, but really develops a further entrenchment within the private securities market as we see the growth of those markets in general.
I would just like to add to that, if I may, and there's a couple of questions that I might try and answer that are being asked here. I totally agree. I mean, I raised a significant amount of money through accredited investors myself. That's why I know it. And I've done it. I've done the lunches. I've done the breakfasts. I've done the country clubs and the golf and so on and so on and so forth. And like you say, Joe, I mean, you got to touch those people 3, 4, 5, 6, 7 times. You got to build trust, credibility. And so then you want a big check, right? And, those people are also not going to drop 250 grand probably through the internet. Although I will say we have had somebody put money in our fund in excess of 100,000 and nobody had spoken to them. Just so that's an interesting thing. That was a big thing for us that we didn't even speak to that person and they put money in. But to Joel's point, you've got this, this trifecta of demand from retail investors. I think Robinhood and those sorts of businesses really fueled a lot of that, where people are like, we have more opportunities now. Then you've got compliance, right? So the Jobs Act, when it really was enacted in 2000, let's say 15, 16, really. So the SEC allowed you to do this selling of these crowdfunding businesses. And then you had technology. And I used to be in technology when I was in the UK. Like I said, I was a management consultant on the tech side. And the platform CalTier has, for example, right now, I mean, that would have cost us millions to build 10 years ago. To allow someone to go to Facebook, see an ad, land on our website, CalTier.fund, put in their details, make an investment of $500. That's the minimum to get into our fund. And, do it through credit card, ACH, wire, whatever it is, self-directed IRA. It would have been a huge endeavor. Don't get me wrong, it hasn't been cheap to build what we've done, but it would have been almost impossible. So, it's the trifecta. It's those three things that are coming together that are really driving this market. So I just want to answer these questions.
Sure.
Can Matt explain the point of different secret sauce to other real estate investment platforms for investors? Yeah, sure. So Ian, there are some nuances and differences. There are also a lot of similarities, right? I think just being totally frank, I mean, it's not like we all have some base level things that are very similar. Some points for us is our minimum investment is $500 in our current fund, and then subsequent investments are $50. We have a very high monthly reinvestment rate. So a lot of folks come in and they'll do 500 to begin, and then they'll just do like another 500 or 100 every month. So we have this auto invest. We're very focused on, well, I back up before I say this. We don't technically have a lock-in period. So we do have a redemption policy, and I encourage anyone to read our offering circular, and I'll probably post the link here in the chat. It's a very long document that gets filed with the SEC, but it is basically how we operate the fund and the business. We have to adhere to that. But so some of the other crowdfunding businesses, some of our peers in the industry, my peers in the industry, they have a lock-in period. So they'll lock you in for a year or 2 years or 3 years. We understand that because real estate is illiquid, right? But we have built our fund so that we have a liquid portion of the money so that people can come in and out. So that's a big piece of it. There is a discount policy for some small fees if you do come out early, but it's not. There's technically no lock-in. We are also at the minute very laser focused on multifamily. We feel very strongly about multifamily at the minute. There's a huge housing shortage in the United States. CBRE say there's a 10 million shortfall of multifamily units new over the next 10, 15 years. Our main business is we go in and we do, for those of you who are not familiar, like a big house flip, basically. So, the assets we invest into, the business plan most typically is that we'll go in, purchase it. It's either been mismanaged or it's at the end of its life cycle. So the current owners don't want to spend any more money to upgrade it. And we'll go in, we'll renovate. Sometimes that's a really light touch. Sometimes that's a paint job and just putting in, just literally a paint job and a cleanup, right? And new management. And sometimes that's a deep reno where you're doing a roof and the HVAC and the parking and putting in new solar, and you're actually going in the units, which would be a huge one where you're actually changing all the units out. And so we look at assets that are in a place of economic interest to us that are going to increase in value. So the idea is you go in, you do the renovation, you sit on it, you retrieve the profits from it, and then you hope at the end of it, the business plan is after a 5-year period, you sell. A lot of the other crowdfunding businesses that we let's say compete with, because I actually don't believe we really compete at this point, because most of our investors, ton of them, will say, hey, we're invested with 1, 2, 3, and we want to put money in with you, which I think is great, right? Diversify across. But some of those other companies, one in particular I can think of, they do a lot of retail. I don't feel very strongly about retail right now. So I don't think I'd want to personally put a lot of money in the retail market. Some of them do single family home swaps, single family home deals, flips. Great, they make money. I don't personally feel that's a long-term strategy for building wealth. We feel very, very good about multifamily. We always look at other things. We're looking at hospitality. We're looking at industrial. Storage is kind of interesting depending on where you go. So if I was an investor looking to put my money and I liked retail, then maybe dump some of your money in the retail one. And this isn't financial advice. It's just I may want to do that and put money with us and someone else. So, Can other US and international investors invest via CalTier's platform? Yes, Ian. I think the minimum at the minute with the fund for international is 5,000. It costs us quite a bit more money to take that money, but the domestic it's just $500. Rob, do you want me to answer? Do you want me to keep going on these, like the current trends in the real estate industry?
Sure, go right ahead. Yeah.
Okay. So, and then there's one for Joel there. That's a good question. So, I mean, I touched on that, Alex, a little bit. You know, like I say, we're really focused on multifamily right now. Our network is very, you know, my business partner, one of my founders, Parker Smith, he does more of that's his main role. He does the real estate side of life. And, you know, his network is very entrenched in multifamily, but he does look at other things all the time. I know he's currently evaluating some industrial opportunities. There are some here actually in Southern California that we feel are very strong, and the tenants, you know, have to book they're very big brands, and they have to book a long-term lease. We like that, right? We're looking for this long-term upward trend. Who knows what's going to happen in this marketplace? I don't think any of us have an idea, right? A lot of people are nervous it's going to dip. A lot of people think it's going to just keep going up. Nobody knows. The way we're hedging our bets is we're doing long-term. So sure, we do see some opportunities, like I say, single family home flips. Technically, we could make more money on that deal in a short period of time, but we don't want to be exposed in it. And, you know, if the market dips or goes up and down, you're left exposed. So that's, you know, we feel that, you know, housing has a shortage. People are struggling to buy homes, as we know. Multifamily, even in COVID, did pretty well. I mean, every real estate industry got hit, but multifamily in particular remained pretty robust, because ultimately people need a place to live. So people fight for their rent, right? So you know, that's kind of our position. Joel, maybe I'll let you answer the Citadel question.
Yeah,
very
I actually wanted to follow up on something you had said earlier regarding the technology that puts things together. One of the reasons why people are able to create these businesses that, you know, Matt's focused on the multifamily, and you might have other people focused on retail or single family, et cetera, is because of that technology. And it's not just the ability of the technology to handle it. It's the ability of technologies to talk to each other. I think that's sort of a real important element of it, is the ability for them to talk to each other. So, you know, when we work with people like Matt, where we're able to sort of leverage off of their expertise from a technology perspective, it enhances what we offer as well. So, you know, that platform now can integrate into what we offer as a broker dealer, and the combination of the two can potentially deliver something that is, you know, 1 + 1 = something greater than 2 at that point. And that's because technology integration in general and diversification, the ability to use traditional technology, blockchain technology, combine the two together, enables the delivery of new products and a greater scale to any kinds of investors, et cetera.
Joel, before you get into the question about Citadel, which I'm smiling because I think it's funny. You know, one of the next questions I was going to ask really both of you, but I'd like to hear from you, is how Rialto and CalTier, or any issuer, works together, and what we do for each other, which I think you were just kind of getting to, but if you could expand on it a bit.
Yeah, so I'll start with that, if that's okay, Matt. So, you know, from our perspective, we are the broker dealer. So we are a FINRA member broker dealer, and as such, you know, we have a strong light on the regulatory requirements and everything regulatory that is necessary. We will work with every issuer and every investor within a regulated framework, to make sure that there is a comfort from both the issuer raising capital as well as the investors investing their capital. We do everything we possibly can. What's most important, I think, from a business perspective, is technologically, we work with the companies to empower the issuer. We want the issuer to be able to see the data, and thereby know their customers or know their investors better than they would otherwise. They have full access to everything that comes through, so they can be empowered to be able to deliver better services, better offerings, get a better understanding, et cetera, of all of their potential investors. What we also do is we are, in essence, the ecosystem of the entirety of the investment process. So, the investment process is not so simple. There are a whole bunch of different component parts that go into it, whether it's onboarding from doing the anti-money laundering and know your customer requirements, and making sure that advertising and external communications are done properly, making sure the monies and the funds and the issuances and the integration with transfer agents, et cetera, all of that is done properly. What we want to do is just create, through the technology, side by side with the issuer, the experience that makes the smoothest experience for any individual investor. What we also want to be able to do is to scale. So it's possible that if you're raising $5 million in a Reg CF, the maximum you can in a Reg CF, that you'll be able to get a whole bunch of people that will invest $100,000, and you won't have that many investors. Odds are that's not going to happen. Odds are you're going to have a lot of retail investors, which means $5 million worth can get you 5,000 investors. And making sure that we're able to scale to handle all of those investment requests and completions is done with a smooth experience for the customer, for the investor. That's essential to what we do. So working hand in hand with the issuer themselves, allowing them to really focus on their business, focus on what they're selling, what they're building, et cetera, doing all that, while we just deal with the operational efficiency, the regulatory environment, et cetera, to make sure that too is a smooth connection with what the issuer is trying to do from a business perspective. That will give the investor the greatest comfort in their specific investment experience, as well as a comfort level that all of this can be handled properly from an operational perspective.
Yeah, and I was listening and I was looking at some of these questions here. Ian had one as well. So, to give everybody, we could do a whole webinar on compliance and process, and I don't want to bore everyone on this call. But I will tell you, for example, so CalTier is a company. We're a fintech crowdfunding real estate company. So we're building technology to allow people to online via their phone. You can download our app, go to caltier.fund. You can download it right now. In 10 minutes, you'll be invested into a real estate fund if you choose to. So we have risk management and compliance at the fund level. And then there's a company, CalTier. And by the way, we have one fund right now, and we're about to launch our REIT. We're working with our attorneys right now to launch the REIT. So we're excited about that. I'm not sure exactly when that's going to come out, but soon here. And then, so at the top level of the company, we're also raising money. We're way out of being a startup. We're a growth company, but we work hand in hand with Rialto to raise money through Reg CF. Now, as a co-founder of a company, we could have gone to the VC market. And we could have gone and raised, $20, $30, $40 million, most likely. There's no promise to that, but we probably could have done. And we didn't really want to. What we wanted to do is build a community of people that not only could invest in our real estate funds, but also us as a company. And that's why we're doing, for example, Reg CF. So to talk about risk management, I'll give you a few examples. Everything we do, so we're a private company, but we basically have most of the things that a public company has to do. So you can see all of our financials, all of our reporting, everything is online with the SEC. There's a system called Edgar. You can see it on our website at the bottom. There's a link, and everything is covered there. We have, audits twice a year. We have to pay for that. We have public auditors that come in and audit our business completely. When we're doing this Reg CF raise, which, as Rob read the disclaimer, we're testing the waters because we're just waiting on FINRA to approve our website with Rialto. So, you've got the SEC, you've got FINRA, you've got Rialto as a broker dealer. So Rialto want to make sure they keep their license so they can operate as a going concern. And so you've got all these kind of touch points. Now there's risk in everything, right? That doesn't reduce, there's no guarantees. That doesn't mean that if someone comes into our real estate fund, could they look, sure, it could happen. But we, like I said before, we have this redemption policy. We keep some of the money back to make sure we have a liquid amount of money to give investors back. And we're in what we would consider very secure. We're in a portfolio of multifamily assets. It's not even one asset, right? So you've got that whole portfolio feel. But I think going back up to the top level, Reg CF, crowdfunding, Regulation A, which is what our funds are under. I mean, they're very scrutinized. You can see the management fees. You can see what me and my partners. I mean, everything is fully disclosed. So, in actual fact, I would be perfectly frank. Doing this business is harder than if my partners and I went out and did a traditional real estate business where we just went to accredited investors, played golf, had lunch, and raised money that way, because we don't have to disclose anything to anybody, right? It's a private company. Doing Regulation A, Regulation CF means everything is disclosed, everything is out in the public, and if we make a mistake, it's going to be, you're going to know about it. So there's a lot of guide rails that we have to go down. So let me just answer Harshal's question.
Yeah, I was going to go there. Thanks.
Can you talk about the risk in quantitative terms among different assets that fall? Yeah, so if it's okay, we could take this offline. I don't really want to get too much into that because, I don't want to get into sort of giving investment advice. But, in terms of, I can't advise anybody on how they should allocate to different assets, right? But what I could say as a catch-all for myself personally, the money that I do have, CalTier is very entrenched in multifamily. I very much believe in it, but I am investing in other things myself, right? And so you just have to either talk to a financial advisor or make your own decision about the types of real estate. And again, that's real estate, so it would make sense, right? If you've got real estate, maybe you want to be in some tech stock and some other things. I mean, it's spreading risk. It depends on how much money you've got, your financial situation, your goals, all of those things. So, it's a great question. I just don't want to deep dive too much into that, if that's okay.
Sure, and I'll say it at the end, but anyone that wants to talk to any of us, they can contact us, and whether it's you, Matt, directly, or us, we can get you in touch with Matt. Joel, I do find it interesting. Jason is asking about why Citadel is so successful, and I think after all the talk you just had about technology, I know the answer.
I'll give you my answer this way. I know there's been a lot of talk about how Citadel did last year, but this isn't the first year that he's had a really good year. It's not like they came from nowhere. They've been doing well for a long time. They have a lot of brilliant people there, and I'm sure that has a lot to do with it. But Renaissance made a big hit with Tesla back in the day, but they were extraordinarily successful even without that. So if I knew exactly what made him do it so well, I would do it myself this year and be as successful. So call them up, find out.
Right.
But now you have to call them in Florida,
Joel,
because we seem to have moved everyone.
Yeah, right. Yeah, Joel, I want to stick with you for a bit and talk about the ATS. John is asking, we've built other ATSs in the past. Can you tell us more about best place to apply this to private securities, in particular fractional digital assets, NFTs, and carbon credits? I know we have a carbon credit customer, but can you talk
Sure.
about that
So
for a second?
the ATS world is really in the secondary market, not just raising capital, but actually enabling people to have an exit strategy. And one of the things that we feel is most important in the private markets is the exit strategy in general for the investment in private securities is one that investors are not in control of. We know that when people say, well, I'm looking for an investment, very often the investor's question is, what's your exit strategy? And the investor is beholden to the company for that investment strategy. Well, in a world where there's an ATS or some kind of secondary capabilities, and to Matt's point earlier, not calling it liquid, right? Real estate's not liquid. Generally, private security is not going to be liquid. A $5 million Reg CF, not going to be liquid. A $75 million Reg A is not going to be liquid. If IBM issued a $75 million issuance, it would not be liquid. But the key is that there is a platform through which you can at least go out to the marketplace and see if there's some interest in what you have. And that gives a little bit of control and empowerment to the investor to monetize their investment without necessarily waiting upon the issuer to do that. And to us, that's an important feature. There is a remarkable amount of complexity that goes into an ATS. There are certainly rules and regulations, but even from a technology perspective, making sure the functionality works appropriately, making sure all the risk controls are in, et cetera. There is a remarkable amount of work that needs to get done. But if private securities markets continue to grow as they are, and if they continue to be the size of the investment capital markets that they are today, creating some kind of secondary market for it is essential for continued growth and the ability for investors to actually feel comfortable in monetizing their investment. For us, that's a very important feature for all of those kinds of investments. So whether it's going to be traditional investments or whether it'll be digital investments, whether it's going to be in standard companies or it's going to be in funds or perhaps carbon credits, things that are in essence new asset classes. The advantage of being able to utilize technology as it exists today is the ability to assetize, if that's a word, every single asset that's out there, to enable it to be a tradable and investable asset, and utilizing technology to be able to do that, and then offering the necessary ecosystem within which regulations can exist, where customers, investors, and traders can feel comfortable in that kind of environment, is going to be essential for continued growth in the private securities space.
Thanks.
Yeah.
I just trademarked assetized. Matt,
George, just to respond to you, George, CalTier is actually running a. We have a Reg D opportunity with Rialto right now. So we have a Series A.1 round. We just closed a round at the end of last year, and we just opened up another round of funding, and it's Reg D. The minimum is $25,000. If you're interested, we can send you the offering circular for that. And then, like I said, the Reg CF is going to launch here as soon as FINRA approves, our changes on the website and some of the other things. So yeah, that's through Rialto. So as well.
Yeah. We handle typically Reg CF, Reg A, and also we help with Reg Ds. I'm trying to track down this question, Matt. I kind of lost it here, but it talked about, here it is, Elliot. How important are property locations for you? I think we all know the answer to that, but if you can talk about that, maybe, what locations you're looking at, and I don't know if you can talk about return on investment, but maybe what your goals are, maybe what you've done in the past. Maybe talk about that.
Sure. Yeah, any numbers that I give out here, and they're non-projections, and there's no guarantees of any future. These numbers I'm using are examples of typical, sort of assets that we're interested in. There's no guarantee of any types of returns, and we have to be very clear about that. And I'd rather, so going back to the question about how we protect investors or how they're protected. That's an example, right? So if someone said to me, Matt, if I put $1,000 in your Reg A fund, how much am I going to make? I can't tell you that. What I can tell you is what we paid out as a distribution, the prior months. I can't give any future goals or projections. And I understand for investors that's sometimes frustrating because they're like, well, that doesn't make sense. But that's part of the protections that are in place with this kind of crowdfunding industry, right? Because what they don't want is folks like me running around promising returns to people when that may not happen. So location, vitally important. We're mainly in the Sun Belt areas. We do have some stuff. In fact, I put the link to our current portfolio. So if you go to caltier.fund/portfolio, you'll see where we just read some of those off. So we've got, Lawrence, Kansas, Richmond, Virginia. We have something in San Diego. We got a few in Richmond, Virginia. We got Houston, Texas. We got Arizona. We did have Arizona. That actually went full life cycle. That sold. Provo, Utah, Austin, Texas, Fort Worth. So a lot of Texas, a lot of, Utah, and another one in Virginia. We're looking all over. I mean, location obviously is critical, but it's more to do with the micro location. So, people say things like, we love Houston. And so, you go to these real estate conferences, right, where you're subscribed to Bigger Pockets or something like that. And someone says, we love this area or that area. Well, it depends on your business model. It depends on the plan. Certainly there are obvious things, right? Like Amazon are going to build a giant facility right in the smack middle of wherever. And for multifamily, there's no multifamily housing, or the multifamily housing stock is old and there's an opportunity to go in and renovate or build new ones. But, that's kind of like a bluebird. That's once in a blue moon that you get that. What we're really looking for is where do we see steady economic growth? Where are we seeing infrastructure? Sure, big box stores, big brands coming in, but we're also really looking at the city. Is the city progressive? Are they putting in infrastructure? Are they trying to encourage kind of people to come to their city? And is there a major draw? Like, so for example, obviously, Houston is, the oil industry, right? So everybody says, well, the oil industry is fine. It's all good. Yeah, it is. But it depends on what your business model is with the types of investments you're making. So it's, we get granular too. And we look at, okay, so if we like an area, let's call it area X, like the ones we did in Utah, one of them's right across the road from BYU. I mean, it has 98% occupancy when we invested into it with one of our partners. That was one of our fractional investments with a partner. And it didn't need a lot of renovation. And we're pretty, confident that it's going to continue with a pretty decent occupancy rate because BYU is right across the corner. It's actually student housing. So when we say multifamily, it includes things like student housing. So it really is looking at the micro level. You got to look at macro, micro. But I think it's a mistake to just say, let's look at a city and say that city is a great place to invest for this type of real estate. You have to start there and then you have to go all the way down. It could even be the crossroads it's on, right? Like for retail, we all know parking is key. I don't care if you've got, a premier retail location. If you don't have any parking, you're not going to get, unless there's a big thoroughfare, you're not going to get any business. Who do you target with marketing campaign? Do you use people who already do Reg A or Reg CF investment? Do you seek out people who have never? That's a great question, Jeff. Yes, so all of our marketing is online. You can find us Facebook, like all of the social media stuff. We run ads. They're carefully vetted and tracked and monitored. Thank you, Neil, for your comment about our website. Yes, we actually have internal people that built that website. But it's all online. Everything's online. Like I say, we have people every day that come into our fund and invest, and neither myself or any of my team have spoken to them, right? So what actually normally happens is people come on, they get on our mailing list. And if you want to get on our mailing list, go to CalTier.fund, stick your email in the Get Started box, and that'll actually add you to our mailing list. And people just start, getting to know us, and they start getting comfortable with who we are. And, then very often it takes a few weeks, and they'll pull the trigger and they'll drop $500 to begin. And so far, again, what I'm about to say is no indication of the future, but we have paid 17 straight monthly distributions to date. So for the last 17 months, we have paid every month. We've paid a distribution to investors, and we anticipate that to continue. It's no guarantee, but that's our anticipation. Like I say, if someone comes in and they like what we do, they might put more money in. If they want to pull their money out, they're able to do that. There is a redemption policy, which you have to look at, but they're able to do that. So,
right. I'm going to ask one more question, and we kind of touched on it, and it's the opportunity that really is unlimited to everybody. But John asks, how does CalTier support diversity and inclusivity in real estate investment? What steps are you taking to make sure underrepresented groups have access to investment opportunities through your platform?
That's a great question. So I guess the first way to answer that is we don't limit in any way, shape, or form, right? We're online. So I have no idea who's looking at our ad. I mean, I know the statistics, but I don't know the individuals, right? So, you can do small things. For example, Facebook, you can, when you're marketing, you can say only show these ads to people with a net worth of 250,000 and above. We don't do that. So our ads are shown to, a ton of people. We don't segment by, the segmentation is more to do with interests, right? So if someone shows an interest in real estate, we say, yeah, show them our investment ads. That's the first thing. It's carte blanche. I mean, the doors are open. We also, when we're working with, if you look at our team, go to our team page, you'll see we're pretty diversified. If you, the companies we work with, when we do co-investment with companies, because we do these fractional investments with other real estate partners, which, going back to the original question of what makes us different, that might be one of the other things too. A lot of crowdfunding businesses don't do that. We are very happy to work with experts in the local area. So, for example, all of our Houston, Texas assets, we're working with companies that are there, boots on the ground. And so we also look at, when we're deciding are we going to work with a company, we're also looking at things like their diversification, things like that. But I think that for me, crowdfunding in and of itself, it's an open door, right? So I will tell you really the two biggest things when you invest through our fund. One is, are you over the age of 18? That's one requirement. And the other requirement is you pass the KYC, which is Know Your Customer, and the AML, the anti-money laundering. That's all done on the fly, right? And so, for example, when our Reg CF is live, Rialto's technology does all of that in the back end. As an investor, you won't even probably know what's happening, but it does do a check on you across databases. So if if there's 99.999% of the time nothing ever comes up,
right?
But those are the two requirements. It has nothing to do with where you're located, financial resources, really anything else. So, you know, looking at it from that perspective, I mean, the doors are really wide open.
Yeah, I'll just pop in just for clarity's sake on that. There is one thing where it does depend on where you're located, because there are certain countries from U.S. law that you're not allowed to take money from. But that's really, you know, an anti-money laundering and those kinds of countries that are on the list, if you will. But other than that, you know, to Matt's point, it's the idea of crowdfunding is not to limit. That's the concept behind it.
Yeah. Yeah. And it gives access to so many people that otherwise wouldn't have it. I'm going to have to close the questions there, but I'd like to ask each of you for your last thoughts or takeaways, anything you'd like the audience to know. Matt, I'll start with you. You're on mute. Matt, you're on mute.
Thank you. And I just want to say thanks for everybody for joining. You know, my biggest advice would be, you know, just do your research, prod around. You know, in terms of CalTier, we do a lot of videos. We got FAQs. Read our offering circular. You know, understand how our business is monitored and tracked. Look at our past history. Just get to know us, and just really understand who we are and the ethos of our company. Are we the best in the marketplace? I don't know. That's for you to decide. We work really hard to do a great job, and we have great testimonials from our customers. So
I'll give my 2 cents. If you're an issuer, just to Matt's point, do your research. There are alternative ways of doing capital raising, and you should explore them, because there are a lot of other ways than the traditional ways out there that are under a regulated environment, and are really interesting. If you're an investor, recognize that there are a lot more investments out there that are accessible by you than there were even just a few years ago. And so if you're looking to get into new things, if you're looking to invest with your heart, or with your feet and things that are of particular interest to you and you want to see successful, all of those things that in the past really were very limited, if available at all, are now widely available, in you know, through whether it's platforms like ours or platforms like Matt's, that really enable that kind of access to a whole new world of investment opportunities.
Right. Thanks for that. Well, I'm going to wrap it up. I'd like to have a big thanks for the audience for being so engaged. Many thanks to both Matt Belcher and Joel Steinmetz for their insights. As a reminder, Matt mentioned this, but you can sign up for their newsletter at caltierfund.com, and then there's a button that simply says Get Started. If you have any further questions, you can reach out to us on the Rialto Markets website. We can get you in touch with Matt. And again, everyone that signed up will receive a replay via email, and the entire webinar will be available on our YouTube channel and our website.
Bye-bye.
Thank you, everybody.